What I'll do this morning is talk a little bit about the peanut situation, what maybe it looks like going in 2012. I think there's a lot of interest in peanuts going into this year due to the high prices that we ended up with in 2011. And Georgia, we were down to the lowest acreage in 3 decades, less than 500,000 plant. Final estimate was 475,000 acres, and U.S. was down almost as low as 2 years ago, or 3 years ago now. But 2009, little over 1.14 million acres. Domestic use has stayed positive, stayed stable, and improved. So really, we're looking to describe the current situation. It's a supply problem for peanuts, and are we going to have enough peanuts going in 2012 based on what happens with 2012 season? And of course, everybody knows what happened with prices. Kind of similar when you look at going back to the previous year, kind of similar situation we ended up in peanuts as we had in cotton the year before. Acreage, of course, has responded since the change in the Farm Bill in 2002 to market conditions, more responsive, where we've seen boom and bust type cycle, and again we ended up at 1.141. So where is this going to be next year? Well, definitely needs to be up, and we probably need to be at least above 2010 or at 2010 just to keep things at the level that they are now. So the projection right now is for us to end the marketing year at about 525,000 tons in the U.S. The question is, how many of those tons are actually usable for the edible market because of the quality issues from 2010, and not as bad in 2011, but there's still, when you look at the grade data, the Federal State Inspection Service data, Georgia had the same amount as Seg 2 and Seg 3s as the year before. Now Alabama is a lot lower, but still higher than normal. So, how's that going to impact going into 2012 in terms of supply? Things could get tighter before they start filling back up the pipeline before harvest. Now, I mentioned demand, and this is for the marketing season that ended in July 2011, the 2010 crop, and the total edible use of peanuts was up. So you can see that the domestic market ended up positive growth, and it came from candy and snacks rather than peanut butter, which was a little different trend. So when peanut prices went up, we was afraid that candy is going to be impacted, where they kind of recaptured some market share that was lost since the 2008-2009 recession time, and snacks too. So looking at so far the first 4 months, when they updated for November, actually it showed another continued increase in candy. That's a little surprising. So that needs to be watched and see, because we still got more than half of the marketing season to go. Peanut butter showed a little bit of increase too. That may have been from, if you think about peanut butter prices rose in November. So that's maybe what that's reflecting, is that actually folks went to the grocery store and stocked up on peanuts. So, anyway, from the consumption side, things look positive. So let's think about what might happen in 2012 in terms of acreage response, what growers plant, what y'all might do for 2012. We need at least 1.3 million acres using that 3,350 pound average yield for the U.S. We need at least that to keep us about where we are in terms of carryover. So at least a 13% increase in acreage. So about 160,000 acre increase in the U.S. Well, I think we could potentially do that in Georgia. Certainly seem better than 100,000 acres if contract prices continue to if contracts come out where they need to be to get us up to that point and stay where they are. But let's say if we plant 1.3 million acres and we end up with a 5% higher yield or a 3,500 pound yield for the U.S., that would push ending stocks up to 645,000. That's more peanuts in the pipeline, but that's not a big surplus of any sort. What if we end up with a bad year, 3,200 pound yield for the U.S., then we're talking a really tight situation again in the peanut market. What if we actually increase acres in the U.S. by 20%, go up to almost 1.4 million acres, then again, at that 3350 yield, then we're talking about 650,000 ton carryover. So, the situation is if we plant more acres, if we get more than 1.3 million acres, we're going to grow the supply, given a normal type yield. But unless we just bust the market and have bumper yields, things may not be too tight. Now, if we go up to 25% up, then we start seeing 650 to 700,000 tons carryover. Then we may see prices that we saw back in 2008, 2007. Current crop prices for shell edibles, according to the Golden Flex contract, $1.30 per pound. And a lot of folks ask, where does that $12.50 price come from the FSA comes up with? Well, we don't know. That's a black box. They don't share the formula. But likely they're calculating it off of this price right here. And that's representative of peanuts that hadn't been priced, if there's any out there. So that price is really not available to growers. But I think, for the outlook, we need at least 1.3 million acres. We could see 1.5 level if growers just go ahead and plant, and even plant without a contract. Then I would expect prices to fall. Seed prices, we project prices to be up somewhere 4 to 8, even 10%, depending on your situation. But seed prices are going to be the main increase in cost. And at that 1.3 cents per pound, if you just add the cost for shelling for seed and marketing and bagging, we could potentially be looking at $1.45 per pound. So that could be a potential $65 an acre increase. Or, depending on your yield, somewhere between $25 to $45 a ton increase on your production. So, costs are going to be higher with seed. For dry land, using peanuts at 2,900 pounds, we raised the yield in our budgets to 2,900 pounds. If we just use a $700 average, let's say we're able to get $700 on all our peanuts, that would give us about $111 left over after all cost. And that's plugging in a land rent of $65 an acre. I went ahead and did a little risk analysis, comparing peanuts with corn, cotton, and soybean. And even though peanuts compares better, looks like a positive potential for returns, the risk is not as high as you would think, but it does favor peanuts this year. 62% potential of having a positive return. That means non-negative return. So when you look at that, compared to corn at $6.85 bushels and 700 pound cotton at 88 cents, then potential for peanuts looks good. So if you're able to get around this price or get a better price, that's why I say, you need to think about contracts this year, whether you want to plant, because if we plant a lot of acres and we end up with a 2007, 2008 type prices, you're talking about less than $500 a ton peanut. On irrigated, using 200 bushel corn and 1,200 pound cotton and 4,200 pound peanuts, we raised the yield expectation on peanuts 200 pounds this year. I know you're talking about 5,000, 6,000 pounds in some areas of the state, but other areas can't reach those yields yet. So this is kind of more of a representative, broader representation. But estimating cost at about $1,150 per acre, using $175 acre rental rate, and that'd give you about 72% chance. But even at $6 corn and 200 bushel production per acre, probabilities actually for corn for a positive return is better than even at $700 peanuts. So peanuts, because of the risk involved, needs to have a premium. So you can see even though the returns per acre are better for peanuts, and that's what you're looking at, the risk side, there's still some differences in terms of just production and price risk when you combine those two. So final thoughts, look at your contract terms closely. What's the net price that you're being offered on contracts? If you're offered $750 on 25% of your pounds, and we end up with a $500 a ton price at the end of the season, you really ended up with only a $560 net contract. So those are some things to think about. Even at a 50-50 in that situation, you ended up with really a $625. And some of them been tied to seed price, and coming out with going ahead and locking in your seed price. So that's something to look at, because then you've already locked in your input price and know whether you've transferred that risk. So, again, I repeat the question: do you need to can you afford to contract or not? This may be the year of the contract. If we plant a lot of acres, then the probability is that prices will go down from there. Not saying that we couldn't have a repeat of this year. That certainly is possible too, but